Hey, what's up, guys? So today, August 31st, it was announced that both Tesla and Apple would be performing stock splits. Tesla at 5 for 1 and Apple at 4 for 1. And it's pretty much what it sounds like. For every 1 share of Apple you own, it would be broken into 4 shares. And for every 1 share of Tesla you own, it would be broken into 5 shares. So this video, I'm going to basically explain what that means for the markets. I'm going to cover how each stock performed today after the big news. And I'm going to let you know if either is a good potential swing trade. Stay tuned. But before I go on with the video, I just want to thank you from the bottom of my heart. You could have been anywhere in the world, but you're right here with me. And that means a lot. Now all I need you to do is smash the like and subscribe button and hit that bell for notifications. That way I can keep bringing you these great videos related to business, investing, entrepreneurship, stimulus updates. Hey, as long as it's finance related, I got you. Okay, so here's a breakdown of how it all went down. After Friday's closing bell, Apple shareholders are due the split shares for each existing share of the company that they own. This is applicable for those who were shareholders of record by August 24th, though Apple said that those who bought shares between the record date and the time of Friday's split would also be issued split shares. Okay, that's good. So if you bought shares after the 24th, you also qualify for the split. Apple shares officially start trading at the new split-adjusted price at the opening bell of Monday's NASDAQ session. Apple announced its plan for the split on July 30th with its most recent earnings report. So basically what they're saying is you needed to buy shares of Apple by August 24th in order to qualify for the stock split. But that makes no sense to me because even if you bought your shares after the 24th, what, they're not going to split it up? Every share of Apple gets split up. That's how stock splits work. So I don't even know why they set that deadline date of August 24th that you had to buy all your Apple shares. I mean, they ended up splitting all the stocks that were purchased after the 24th anyway, so why even announce a due date for purchasing your shares? That makes no sense to me. Then it went on to say, expect Apple's stock price to be about 75% lower when trading begins Monday morning. So 75% is 3/4 lower. So if it's a 4 for 1, that means the 1 share is going to get broken down into 4, which is, 1/4 of what the price was would be 75% lower. I know it sounds kind of confusing when I'm saying it like that, but yeah, that's pretty much. So shares closed Friday at $499.23, suggesting that they will open around $124.81, though the tenor of the pre-market trading could affect that. While some systems may appear to register that Apple's stock has actually declined by 75%, the historical records will eventually be adjusted so that Apple's past stock prices are also reflected on a split-adjusted basis. So if you live under a rock and you somehow didn't hear about today's stock split and you woke up and checked your phone and saw that Apple fell by 75%, you're going to probably pass out and be like, oh my God, I got to get rid of these. Don't worry. The overall value of the company is the same. All the overall performance growth that Apple's made for you in your portfolio will be fine. Everything will adjust itself accordingly. Don't worry, the market cap's the same. Now, here was a note in the article that I really appreciated. After it says Apple's stock split took place after close of trading Friday, it anticipates the move will make its shares more accessible to a broader base of investors. So pretty much, Apple's trying to encourage you to buy more shares of their stock or to even begin investing in their stock. And they figure if it's $130 or $125 a share, that makes it a lot more accessible to the beginning investor. And it doesn't repel you away and say, oh, that's a little too pricey for me. They want as many people to be investors in Apple stock as possible. When it was trading at $500 a share, it's enough to turn some investors away. It might be a little too rich for some people's blood. But at $125, you can get in somewhat on the ground floor. Okay, so there was a little bit of history that took place today. This marks Apple's 5th stock split in its time as a public company. It went public in December 1980. Apple conducted a 7-for-1 split on June 9th, 2014, and 2-for-1 splits on June 16th, 1987, June 21st of 2000, and February 28th, 2005. Had Apple never split its stock, shares would currently be changing hands for roughly $28,000 apiece. Damn. All right, so that's what Apple's doing. Let's see what my boy Elon Musk is doing over at Tesla. Okay, so in a CNN business article, it says, Tesla shares are much, much cheaper Monday after the stock's 5-1 split. Even though Tesla stock closed 12.5% higher at $498.32 a share Monday, That's still around $1,800 cheaper than where it was trading on Friday. The company announced the stock split earlier this month, making shares more affordable for average investors. So basically, Tesla had the same type of thinking as Apple. They wanted to encourage a lot more investors to buy their stock. Whether it's a new investor or a seasoned vet, a price point in the $400 to $500 range is a lot more enticing. They know people can afford that a lot easier than they can $2,200 a share. At $2,200 a share, only a select few can afford that, and it's going to turn a lot of people away. Whereas now, $400 to $500 range, yeah, that's affordable. I mean, it's still pretty costly, but it's affordable to a lot more people. The article also went on to say the split will not change the value of investors' total holdings of the company. It'll just grow the number of shares making up their portfolios. Tesla stockholders are getting 4 shares. I think they made a mistake there. It's supposed to be 5 shares for each share they held last week. Because it's a 5-for-1. I don't know why they said 4 shares. Tesla also continues to be a big target of short sellers. And I'm going to talk about if this is a good trade later in this video. Investors who borrow the stock and sell it with the hopes of eventually buying it back at a lower price. Elon Musk, Tesla's CEO, likes to point out, correctly so far, that analysts have been consistently wrong and that Wall Street keeps raising its earnings forecasts and price targets on the stock. Elon's right. Wall Street has gotten it wrong. That's because Tesla is such a difficult company to give a proper evaluation on. Is it a tech company? Is it a car company? Is it a space exploration company? We don't fully know yet. And that's because there's been no other company like it in history. We've never seen anything like Tesla. And the rock star status of a CEO like Elon Musk, he has a fan base that doesn't care what he does. They'll support Tesla no matter what. After having a very rough 2018 by going on a podcast, smoking weed, and announcing publicly on Twitter that he has the funding needed to go private, raising the eyebrows of the SEC, he's put together a very solid 3 or 4 quarters in a row with his auto sales and success of SpaceX that raised the overall market cap and value of the company and price per share to a level that it's caught the attention of a lot of short sellers and swing traders out there. Pretty good, Elon. Okay, so Tesla today opened the day up at 444.55 and finished the day at 514.24. I bought this on Friday. This is actually the first stock split I've ever been a part of. And by a part of, I mean actually owning stock that's getting split up in my portfolio. I've only been on the market for 3.5 years as an investor. So I bought 1 share of Tesla on Friday for $2,279. And it got broken into 5 pieces of $455.80 for each of the 5 shares. That $455.80 went up by 12.5% today and another 3% after hours to finish the day at $514.24 a share. So just from Friday to today, I had a total return of $292.20 if I decided to sell right now. Oh, it just went up $293.80. But you know what? I'm going to hang in there. It's a little risky because Tesla can be volatile, but I'm going to hang in there because I feel this is going to go up a little more this week just based on the stock split news. So in just 3 days' time, I made $293.80, and that was only off 1 share, mind you. Imagine if I bought more shares of this. Jeez. Okay, now let's take a look at what Apple did today. Okay, so after closing at around maybe $5.08 per share on Friday, Apple opened up today at $127.62, basically broken down to a quarter of what it was on Friday, thus confirming the 4-for-1 stock split. So I basically bought 1 share of Apple a long time ago as a buy and hold forever because Apple is something that I don't really trade with. I bought one back on May 17th of 2017 for $154.11, and it went all the way up to $508 just over time and growth and capital gains. And then that got broken down to the $127 like I mentioned before, and it finished the day at $129.30. So it just continues to go up. Now, even though I'm a buy and hold investor with Apple, I do still recommend that you can make a good little profit if you swing trade it. Over the last week, it's went up 3.7%. Over the last month, 19.5%. And over the last 3 months, 61.2%. This thing is just rallying. Now, I'm a little more likely to trade Tesla than Apple. Apple is something that I'm a long-term investor in, but if you wanted to do a good little swing trade with Apple, I wouldn't knock it, because Apple, I think you can make a fair profit. I think Tesla's a little more designed to be kind of a short sell. And that method of locking in profits and not getting too greedy is something that's recommended by professional traders on Wall Street. You're not going to knock it out of the park and hit a home run with every single trade that you make. But as long as you carefully scale your portfolio day by day, you can achieve the same type of success. You know, we all have goals of how much we want to make from a potential trade, whether it's 10% or 20%. Sometimes it's better to take the lesser percentage and just hop out too early rather than too late. You don't want to get stuck with that stock because it dropped now below your average cost and you're just sitting there with it. And now that money's like dead money because you can't even look for the next potential opportunity. Think of it like Bill Belichick on the Patriots. He prefers to always get rid of a good player 1 year early rather than 1 year too late. So that about does it for today's video. And if you had anything you wanted to add about today's big news on Tesla and Apple stock split, by all means, pitch in your 2 cents down in the comment section below. I look forward to hearing from you. And if you think either is a good trade, I want to hear about that too. Let me know your opinions. Later.